I want to quickly explain how I use market internals because it's protected my capital multiple times recently. But first, let me say I do not use market internals to predict direction, and I do not override macro structure with internals. My hierarchy remains macro levels and structure, the SPY, RSP, IWM, and Qs, market breadth and sector strength analysis, setups or a trigger, typically my triple R model. And if all of these align and suggest an opportunity to take a position or put on risk, then I use market internals to validate the strength at that moment. So I use internals to answer one very simple question. Is there real buying pressure right now or not? And if the answer is no, then I don't care how pretty the chart looks or how much it looks like it's about to break out. And this goes into exactly why market internals matter. Because markets can look like they are about to break out while buy-side participation is stalling underneath. And simply put, that's how you get trapped and buy a top. So internals allows us to see what's happening under the hood in real time. And I'll share with you here the grid that I have built to monitor market internals. Starting with the top left here, we've got the up-down volume. And this very simply shows how much volume is flowing into advancing stocks versus declining stocks. Is there more buy-side or sell-side liquidity coming into the market right now? And this is all measured at an institutional level. This is institutional order flow. So a rising VOLD means institutions are simply adding exposure. And then here we've got a flat or declining VOLD, signaling that buy pressure is neutral or stalling. And a fantastic way that the VOLD, or more specifically all of these internals I will teach you about here today, can protect you is by using it as a divergence indicator. So as you see, the crosshair will overlay on the time axis on any chart. So as you see me moving here and down in the bottom right over the SPY chart, check that out. Let's go here to December 1st, where we've got the market open. And the market is pushing up. But look at the VOLD here. We're flat, okay? So that would have suggested to me at this time, we don't have full market participation, okay? The majority of stocks are simply flat on the day, and we're getting this uptick in the SPY. Okay, that is a divergence. That is a time where I would exercise caution and think, hey, we don't have full participation. Let's pump the brakes on any new positioning and read more into this. And as you can see there on the day's session, we did push up in the SPY where you maybe would have thought, I'm missing a move here. But really, staying below the zero line on the VOLD, I absolutely would have wanted no part in this move. And look what it did. It rolled over in the afternoon session, as we see here on VOLD as well. So I did not pre-plan this, but let's jump over to the advanced decline and take a look here at December 1st. And yep, there we go. We've got the advanced decline. So the stocks making new highs versus new lows moment by moment in the markets remain below the zero line all day long. This absolutely would not have been a day I wanted to add risk in the market. And market internals would have made that very clear for me. So let's keep moving here and talk about the advanced decline box I have here on the top right of the grid. And again, this tracks how many stocks are advancing versus declining per session at this moment. I want you to think of add as breadth confirmation, where we may feel that we see something over in the indices. Specifically, sometimes the SPY will be running out of the gate and it makes you feel like I should do something. But the advanced decline line will have a divergence where it's just not reflective of what you want to see when there is broad buying. Okay, so we're selling off. I think this was an example right here. Let's do this together here. Monday the 15th. We'll go ahead and pull that up here on everything. We've got Monday the 15th, and then let's jump down here in the SPY's price action. Okay, we've got Monday the 15th here. So this was a gap up day in the market, and I would say there's nothing here suggestive of a new entry. But what I see here is that we gapped up that day over the weekend. We closed at lows on Friday, and then over the weekend we gapped up. A lot of the market opened higher, but immediately we started seeing sell side. Okay, so this can protect you from chasing gap ups because you can quickly look into here at market internals and see the majority of the market is flushing right now. Okay, so the idea of adding risk into a flush, that should be pretty clear. Let's not do that. But reflecting back here on a time where we had a strong add, in a strong trend, the ad will advance with price, okay? We'll continue chugging higher. More and more stocks in the day's session are continuing to make new highs on the day, okay? That's all you need to know. That is what this tracks. Are more stocks making new highs on the session, or are they pulling back and selling off, okay? It's very simple. Do not allow this to overcomplicate anything for you. It is a way to monitor the moment by moment buy side, sell side action in the market at an institutional level. This is Wall Street. So just to finish our thoughts here on the ad, in a weak market, it will stall and roll over. This is signaling to me that most of the market is selling. And again, if you see the market pushing higher, here it is. We've got a divergence. That was a failed breakout in the market. But what we had here was the market pushing higher. Look at the crosshair on the pane just above. Market's pushing higher while the AD stalled and started rolling over. Okay, the market was pushing higher. I'll zoom in here. The markets were pushing higher, but the AD was stalled and began to roll over. That is not a signal of full market participation. So what very likely happened in this day's session was that we were led by the Mag 7. Positioning outside of that would have been buying indecision or even weakness, okay? And then look what happened the next session. We absolutely rolled into the current pullback we are in the market. So this was a noticeable divergence in market internals that should have protected you from positioning. So again, the ADD tells me whether the move is broadly supported or just a few names doing the work. And when I am putting on risk, I want the full momentum of the market behind me. And then we've got the tick in the lower left, and this measures how many stocks are trading on upticks versus downticks right now. This is second by second. This is the heat sensor. And we've got these additional lines in here at 800 and 1000, and above 800 is aggressive buying. So if you align this with the other things that we see, so this is a signal of aggressive buying through volume. Let's go over here to the Thanksgiving week where we were really buy side heavy. This is a signal of aggressive buying in volume, okay? And zooming out to the tick, let's see here, zoom out a little bit more. Look at in this time, specifically right here, this big buying day. Look at all the time we spent above the 800 and even the 1000 line on the tick. That was heavy buy side action. And if you'd like to know, this was one of the largest institutional positioning days of the year. I believe it might have been the largest or the second. It was one or two of the biggest institutional positioning days of the entire year. Okay, and it was reflective on the tick, on the VOLD, and let's zoom out here to the ADD. Yeah, okay, we opened and pushed higher almost the entire session. All right, we stalled just a little bit, but we did not roll over and pushed higher for the entire session. And then back to how I read the tick here, we've got our zero line, and the inability to hold at the very least positive above the zero line just simply signals a lack of follow through. So again, zooming out to, let's call it, what was this, Friday, November 21st. We'll zoom into that time in the tick. And you can see here, we spent the majority of our time in the closes in these 15-minute bars above the zero line, right? So there we had follow through, and then we had multiple sequences of aggressive buying on that day as well. But we did clearly spend most of our time above the zero line. This is a positive signal for momentum. And again, this is tracking by the minute, by the second, how many stocks are trading on upticks versus downticks. So what the tick tells me is the move being bought broadly right now? And one more real example, yesterday was very relevant for us in the market internals, aligning it with the breadth. In my analysis for the day, we have this no trade long zone with a top end right around the 680 area. Knowing this was a major recent resistance level, with Tuesday and Wednesday failing to get through that level, and it's right at Monday's close. So this has become short-term major resistance. So my macro analysis told me, hey, listen, don't take any trades until we can clear through that level. And before yesterday's print, it was also remounting the 9 EMA, which is what I require to signal a resumption of trend. Okay, I use a 9 EMA as my short-term trend indicator, and I need price above it as a resumption of trend. We're not going to get into all of that, but this was a major level for me here. And if you look at how the session opened, we went sideways, but then we pushed right up into it. And what did we do? We stalled right at that level. So macro and leveling is extremely important, but let me show you here how market internals is what protected me from exposing any capital at what ended up being the top of the day's move, okay? I'm not saying we won't get through that level today and get some legs to the current possible resumption of trend in the market that I'm looking for, but it did signal to me, pump the brakes. So at 11:45 in yesterday's session, give me a second, let me get all of our charts aligned here. And we're gonna look at 11:45 and yesterday's session. And just before we get into this one more time, I do not hover on market internals. I align my positioning with market breadth, structure, and the triple R model. Okay, that is my reason for entry. But when I am ready to pull the trigger, I have gotten to a point in my trading where I then switch over and confirm in market internals. So I was looking possibly as we were testing this 680 level. I had some favorite names that I was watching, and I was considering an entry, but I noticed first on the 5-minute, hey, we're stalling right at major resistance, okay? Caution flag number 1. Then I look over into the market internals. It's 11:45. Okay, well, the up-down volume has stalled as well. Caution flag number 2. And then looking at the advanced decline line, 11:45. We actually start rolling over, but we had already stalled on the number of stocks making new highs on the day session. We had already stalled and we began to roll over. Caution flag number 3. At this point, I'm not interested in taking an entry right into major resistance right now. Doesn't mean it's not something that could still come, but you should be able to see very clearly how this protected me from getting rolled. And then the market closed at the bottom of the day's range. Okay, this protected me. I hope that is clear for you here. All right, I had a major level mapped out macro analysis, market breadth, leveling, structure, all other things you need to know and I view as more important. But remember, I view market internals as my validator for my right now. Is it time to push the button, or do I need to sit on my hands? So again, the way I use this in practice is not to have another set of charts to be monitoring. I don't track internals all day. I check them at decision points, and it's a simple question. Do I have the market at my back right now? And if internals say yes, I can press. If they say no, I stand down. And again, do not allow this grid to complicate your decision making or your analysis, okay? It is a in-the-moment decision validator. The link to this grid that I built is in the description below. Feel free to access those, and you can email me warrensnacks@gmail.com if you have any further questions, or just hit me up, comment below. I will respond. So guys, that's a brief look at market internals and how I use them.